My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content.
Hey folks, our guest today is a very accomplished real estate entrepreneur and a cowboy, definitely from the look of him. Not your average Joe, Rinderknecht. Joe, welcome to the show. Great to have you.
Thanks, Dave. Excited to be on here and add some value to your listeners.
Yeah, most definitely. So Joe, give us a quick snapshot of what you do in this wild and crazy world, the wild west of real estate. What do you guys do?
Yeah. So, most people think I am in ranching or land or something, but I actually acquire apartment complexes that are largely value add deals. Our main markets that we focus on are Mountain West states, Montana, Idaho, Utah, and we recently expanded to Texas. So
that's really interesting, Joe. I've interviewed a gazillion people on the show. You're the first guy, I believe, that I can recall that talks about the mountain states. Everybody wants to invest in Texas, but Montana, Idaho. Where else did he say invest?
Montana, Idaho, Utah.
Utah. Okay. I've had a few in Utah, but Montana and Idaho. That's very, very interesting. So give us a little snapshot. The current portfolio, how many different communities do you guys have or operate, or are you involved in? How many units under management at this particular point?
Yeah, at this point, we have 419 units under Cowboy Capital, and we've acquired all of those properties in the last 12 months.
Wow.
We bought the first property September 30th of 24, so just about a year and a month. Bought the first one is a 54 unit, 98 built in Missoula, Montana. We bought that deal for $6.8 million, and we have it listed right now for $11.8. We bought a second one, a 25 unit there. That's a condo. It's not like our multifamily bread and butter, but it's still multifamily that we're kind of fix and flipping for condos. And then we bought a 48 unit in Boise, Idaho in June. And then we just closed a 292 unit in San Marcos, Texas, about a month ago now. So
very, very interesting. But Joe, this is not your first kick of the can. You've been doing this real estate thing for a while now. So this is what you've accomplished under kind of this new branding of, what'd you call it, Cowboy Capital? Is that
Cowboy Capital? That's nice. Correct.
Like
yes,
that.
sir.
That's good branding for you. That's for sure.
Yes.
But before that, you've also done other things in the past, correct?
Yeah. I've been doing multifamily for about a decade now. Okay. And my business partner in Cowboy Capital, he also has a background in farming, ranching. His family owned a big cattle ranch and potato operation up in Oregon. And so both he and I have about a decade of experience in the Mountain West, right? Like we knew a lot of people that invested, that were living in Utah and Idaho that were investing in Ohio, Georgia, Texas, and we just kind of sat and focused on the markets that were in our backyard. And that has really given us a competitive advantage right now, because he and I have our own levels of experience and expertise, and that's what's really made us a team. But since we've built such a track record, if you will, in the Mountain West, that we're winning deals, we're getting pocket listings and winning deals that we wouldn't have, otherwise.
So what are some of the big advantages from an objective real estate investing standpoint for Mountain West, that area?
Yeah. I mean, we know our markets really well. Yep. And I think most people won't invest in these markets because like that price per unit and cap rate. So price per unit is going to be higher significantly than Texas or really a lot of these other markets. And the cap rate is going to be lower, right? Like that first Missoula, Montana deal, we bought it for like a 3.9 cap, right? But it's like cap rate's not the end all be all. But what we've seen is like, even though like that price per unit is higher and the cap rates are lower, like we're really, really good at executing our business plan and doing the construction and decreasing our cost per unit because of our relationships locally on construction, that it gives us a competitive advantage to be able to go and do it cheaper, but still have a very high quality product.
Okay. Interesting.
You know,
So you mentioned that. So how long have you been running the Cowboy Capital for now?
a year. Yep. It started with that first deal in Montana.
Okay. And that first deal, you've already flipped that out. So basically, what's kind of your investment philosophy? Is it kind of transactional, or is it buy and hold, or is it deal dependent? What's your exit plan with most of your deals?
I'd say our main strategy is buy and hold. But we are young. Both my partner and I are young, early 30s. And so I'd say we're more opportunistic to what the market says.
Yeah.
And so it's like if we can sell this deal at 11.8, then, we get a huge return. And both of us had some deals that went sideways, a couple of years prior, right? From like 21 to 24, we both had deals going sideways. And so if we can transact and sell this deal at $5 million more than we bought it, then that gives our investors a quick win and gives us the ability to turn that money into another deal really quickly. So our objective really is to hold long term, but we'll sell if we can, and if we can't, then we'll just refinance. We like the old adage says, you make your money when you buy, and so we're making sure that we're buying deals.
Well, you make your money when you buy and keeping your rehab costs under control. That's
yeah.
That's to be for you guys.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com.
Okay, so Joe, you and your partner, do you typically, are you the lead sponsors on these deals? Are you the sole sponsors on these deals? Do you work with other co-GPs? Yep. How does that kind of side of things work for you?
Yeah, the smaller portfolio, the smaller units, the two Missoula deals and the Boise deal were the lead sponsors. I mean, even the Texas deal were the lead sponsor. But we have two GPs that came in and brought their balance sheet, right? They're more KP than actives.
Okay.
Right. So, but yeah, we love doing joint ventures. We've been building some relationships with like family offices where, they will bring 90% of the capital and we'll just do a straight 90-10 split, and we'll do a straight joint venture. We're working on a couple like 200 plus unit deals right now where we're trying to, put that JV together. But yeah, we do enjoy doing that, and all of the deals, like, let's see.
Sorry, can we back up for a second there?
Yeah.
90-10 split. They're bringing in 90% of the capital.
Yep.
Who's bringing in the other 10%?
Us. Yeah. With either our own capital or our investor base.
Okay. And then it's a 90-10 split for the family office.
Yeah.
Seems like it might be getting kind of skinny for you guys if you're doing all the work.
Yeah. Well, we'll still have like our acquisition fee and asset management fee up front. Well, acquisition fee up front. And we only take an asset management fee unless we're cash flowing and we're distributing, right? Mm-hmm. But we like to invest a good amount of our money into our deals if we can. Like that first Montana deal, we invested $650,000 as common equity because we both had a deal that traded. But the other thing too is like, if anybody's been in this business long enough, you got to know that you have to have a long-term outlook on everything that you do. And so, yeah, it is a little skinny for us, but will they help us get to a couple
billion? Get your foot in the door, start those relationships.
Yeah. 20 years from now, maybe it's 50-50 and we're making hand over fist. So it's like, we're willing to give more of the the deal away right now to just build those relationships. And, it's paid amazing dividends just on these deals. Cause, we've got guys that have, invested, six figures with us, even in the last 12 months, on these deals, because we gave more of the pot away at the beginning. And
well, speaking of capital raising, Joe, everybody kind of went through the crapper over the last few years with some deals that went sideways, and disgruntled investors and cash calls and things with nasty phone calls and all that kind of good stuff. It sounds like you guys have had your fair share of that. How do you find it nowadays for raising capital, especially from retail investors, individual LPs? Have you modified your approach at all, or what do you guys do? It's working well for you that way?
I would say the new motto for our deals is run out the bad news and walk out the good news. Right. We had a deal I had a deal in Utah that went sideways, and I was a minor GP on that. And the reports to investors was always sunshine rainbows. And then things went sideways and we had to do a capital call. And that's when it's just like, you got to be willing to have those, what I call fierce conversations when things are going sideways. And so it's like, I approached like the investors that weren't even mine and just said, hey, this is what's going on. This is how I'm trying to fix it. So I think like the best way to raise capital is to tell the bad news, even if, like I was willing to do it, even though like these investors could sue me. Right. And it's like, you got to be willing to get out of that comfort zone or to have those conversations, even when things aren't going correctly. If you run that out and instead of trying to paint a beautiful picture, then they're going to appreciate you for that. And like I had one investor who was in the deal that went sideways. We were able to get 100% of capital back, but not really a return on capital for the 3 years that we held it. Right. But since then, he has, deployed 7 figures with us. He's one of the GPs on my Texas deal, and he's on my board of directors. And like, that's how you build trust, right? Is how do you face challenges and issues when, things go sideways and it's, not glamorous anymore. And so
sunshine and flowers. Yeah, no, that's deep. That's one of those life lessons that, that's going to stick with you no matter what business you're in and what relationship you're in. That's good advice there, Joe. So when it comes to the whole working with partners and co-GPs and that sort of thing, what have been some of your takeaways through the good times and the not so good times with some of these experiences you've had?
Oh man, I'll give you the lessons learned first, and that's like take your partners wisely.
How do you do that? What advice would you give yourself 5 or 6 years ago?
So, I got into this deal that went sideways with guys that I knew.
Yeah.
Right. And I had known since college and for years. I think what I could have done to do more vetting is to talk to people that they had actually done deals with, because this was our first deal that we did together.
Right.
And I actually had a buddy that said, hey, this other person, he kind of micromanages and he's kind of really difficult to deal with. And he taught me a lot of lessons that, he hardened me because, I did not love that guy for a lot of this deal. But I think like vetting them thoroughly, talking to other people they've done deals with. And then like, if they say they have experience in one area, you need to vet that too and make sure that went well or didn't. And what did they do to resolve it if it didn't? And I think the biggest problem that we can run into is that when you're all excited, when you're in a mastermind group, because we were in a mastermind group together, and you get all excited, it's the rah, yeah, whatever. And you get all excited about doing a deal together, and you see numbers and you see how much you're going to get paid on your first acquisition fee. And you let those emotions get ahead of you, you're most certainly, setting yourself up for failure. Right. Sometimes it does work and it has worked, but like, just take my advice and go vet them. It's nothing personal, because if things go sideways, they're not really your friends anymore. They're just, it's like, it's a bad divorce that you can't get out of, And so it's like, because these were both friends, right? And so it's like, I will never do a deal with them, and they maybe me not either. And it's just really unfortunate. But it's like, if you're gonna do a deal with a friend or even a family member, like, I think the other thing to this is, like, have very specific roles, responsibilities of who's doing what. And if those things are not executed, then that person's just out, right? It's just like, it's nothing personal. It's a business. You're affecting my family and the income we make and our investors and, like, all the people involved, right? You have so many more people than just yourself. So you got to take the personal out of it, I think, and really look at it for what it is. And that's a business relationship that you have to look at differently.
Yeah, most definitely. Joe, as we're wrapping up our interview here, we're doing this recording at the end of October 2025. What big things do you have on the horizon for 2026?
Oh, yeah. We bought 419 units this year. We'd like to buy another 500 plus going into next year. We raised $12 million in the last 12 months from friends, family, and, like, referrals. And I think our average check size was, like, in the 400s. So we want to continue to grow that. But I think we're not going to do a deal just to do a deal, right? Yeah. That's the goal.
Yeah, well, a lot of people learned that lesson the hard way the last.
That's right. So we're just going to keep hitting the pavement. And, one thing that I'm very focused on and detailed on is the asset management. Mm-hmm. So it's like, even though we got to keep generating new deals, that's my partner. That's his bread and butter. He's the deal junkie, which I love, but I love the nitty gritty details more in the asset management, construction management. So my head's going to be down, making sure that our construction costs are where they need to be, or KPIs are hit on our occupancy and collections, because, the capital raising and the purchasing a deal is sexy. The asset management is not, but the asset management is where you make your money, or you break or you make it. And, so that's kind of, we're going to be looking to purchase, but we're going to be looking to really perform on our assets and get them to a place where we can dispo them if the market changes, and we have buyers calling. So,
Joe, if people want to connect with you and find out more about what you guys are up to, where do you want them to go? Would it be better to go to LinkedIn or your website? What do you prefer?
Yeah, on LinkedIn, Instagram, you can check me out, Joe Rinderknecht, or you can email me, joe@cowboycapital.us, or check out our website, cowboycapital.us.
Perfect. Joel, this has been a lot of fun. Congratulations on your success. More importantly, congratulations on learning something from those really crappy experiences you've gone through. It sounds like it's made you guys stronger, made you more conservative.
Yep.
Made you bet your partners a lot stronger than before. So you're coming out this other side stronger, man. So good on you.
Yep. Yeah, thank you. Appreciate you having me on, Dave.
All right, everybody, take care. We'll see you on the next one.
Hey there. I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.